Welcome back to Crypto Meets AI. Jerry here with an update for you. Do me a favor, friends. Smash that like button, hit subscribe, and comment down below. Now let's get into this. A global debt crisis is quietly brewing, and almost nobody is connecting the dots to what this means for XRP. Global debt is at all-time highs, bond markets are flashing stress, foreign demand for U.S. Treasuries is collapsing, and liquidity is evaporating from legacy systems faster than central banks can patch the leaks. This is how every major monetary reset begins. In a debt crisis, three things happen every single time. Governments lose control of liquidity flows. Traditional rails freeze or become too expensive to use. The world searches for a neutral, fast global settlement asset. And that's exactly where XRP steps in. XRP is neutral, instant, liquid, deflationary in function, built for cross-border settlement, already integrated with banks, treasuries, and institutional infrastructure. While fiat debt becomes unstable, settlement rails become priceless. The asset that moves value across borders at the speed institutions require becomes the biggest gainer of the crisis. Ripple Prime, GTreasury, RLUSD, Moss approvals, institutional corridors, XRP ETFs, Singapore, London, Middle East, they're all pieces of the same puzzle. A new global settlement layer ready to absorb the shock when the old system breaks. A debt crisis destroys confidence in government IOUs, but it supercharges the value of neutral settlement assets. Gold is the old version of that. XRP is the new. When liquidity escapes the bond market, it will not disappear. It will migrate to the fastest, most efficient, most compliant, globally connected rail in existence. That rail is XRP, my friends. Breaking news. Brad Garlinghouse says Trump's Crypto Clarity Act will pass in early 2026, and institutions are already rushing in. At today's Binance Blockchain Week, Ripple CEO Brad Garlinghouse got asked whether the U.S. is finally done being hostile to crypto. His answer, a flat-out yes, and then he went even further. The U.S. was hostile. Now it's flipping faster than anyone realizes. For 4 to 5 years, the largest economy on the planet, 22% of global GDP, tried to suffocate crypto. But now, regulatory clarity is here, and people are underpricing how big the shift is.
I think one of the things that Binance has done incredibly well, the numbers that Richard was talking about, 300 million people, they're bringing people into crypto. We all want, there's an echo chamber that we all experience of people in crypto. But the amazing thing about the passionate pioneers that are here in this room is they've been in. We just want that audience to grow. And I think what you're seeing happen in the United States with regulatory clarity, Richard earlier referenced the Genius Act. The Genius Act is regulatory clarity for stablecoins. And you're already seeing more institutional interest in stablecoin payments. Ripple purchased a company called GTreasury recently, which has visibility into over $10 trillion of payments from their corporate customers. And the number of those customers were already, the acquisition closed Monday. The number of those customers that are already approaching us interested in leveraging stablecoins for the flexibility, for better yield, for as a trusted resource is, because of that clarity, people are leaning in. We don't yet have, obviously Ripple went through a long lawsuit with the US government, and XRP received regulatory clarity from the federal courts. We have been championing, and now Team Solana has been championing regulatory clarity for crypto broadly in what is generally called the Clarity Act in the United States. There's still forward momentum on that. I don't think it's going to happen this year, which the President Trump has kind of championed. But I think sometime in the first half of next year we'll see passage of legislation, which will continue to unlock and create more tailwinds for the whole industry.
The XLM versus XRP debate misses what actually happened. XRP partnerships with banks for liquidity sourcing. XLM banks building on infrastructure directly. US Bank isn't partnering with Stellar. They're issuing stablecoins on Stellar. WireX isn't using Stellar for settlement. They're selling Visa transactions and USDC on Stellar. Franklin Templeton didn't integrate with Stellar. They tokenized 400 million plus on Stellar. The difference, XRP facilitates transactions between banks using traditional systems. Stellar replaces traditional systems with programmable rails. Both solve cross-border payments. One is the bridge, one is a new infrastructure. Processing time, both 3 to 5 seconds. Transaction cost, both fractions of a cent. Network structure, XRP centralized, which that is not true. XRP is decentralized just like Stellar is. Use case focus, XRP institutional liquidity. Stellar financial inclusion plus institutional. The market debated which would win banks. Banks chose both for different purposes. Understanding the difference matters more than picking sides. So more U.S. stablecoin laws coming this month. FDIC Acting Chair Travis Hill says new stablecoin framework coming this month under the Genius Act. FDIC will set capital rules, liquidity standards, and reserve requirements for USD stablecoin issuers. The regulation wave is incoming.
This afternoon, we take a giant step to cement American dominance of global finance and crypto technology as we sign the landmark Genius Act into law. The Genius Act creates a clear and simple regulatory framework to establish and unleash the immense promise of dollar-backed stable coins This could be perhaps the greatest revolution in financial technology since the birth of the internet itself. With the privacy, flexibility, and decentralization of cash, this revolution has the potential to supercharge American economic growth and empower billions of people to save and transfer in U.S. dollars. This will increase demand for U.S. Treasuries, lower interest rates, and secure the dollar's status as the world's reserve currency for generations to come. The reserve currency is so important. If we lost that, that would be like losing a world war. The entire crypto community, for years, you were mocked and dismissed and counted out. You were counted out as little as a year and a half ago. But this signing is a massive validation.
For more breaking news, Georgia's Ministry of Justice signs a major deal with Hedera to put public registry data on blockchain, enabling real estate tokenization, smart contracts, and greater transparency. And we're not talking about the state, Georgia. This is the country, Georgia. Brad Garlinghouse takes a question from a banker. My transfer took 24 hours and $10 in fees. Brad Garlinghouse says, with XRP, the settlement is done in 3 seconds.
Last year, I had a fellowship at the Bank of England for a month, and I had to pay my rent in advance. It cost me $10 and took me 24 hours to transfer the money from Bank of England to Santander UK. So I'm not going to tell you what the platform was. You know what my banks are. The problems with that transaction were that the money was uninsured for the 24 hours that it was in transit. And $10 may still be a lot of money for the Philippine copy editor, but I think there's a tendency to overstate the gravity of the problem. The question, and Brad, this is an honest question. Ripple is, one of your products is to distribute liquidity through the payments system. So the question is, could there be a run on Ripple? In other words, everybody wants your liquidity. Nobody wants to provide it because there is a scenario where people develop doubts for good reasons or bad about the system.
So let me first clarify what Ripple provides. Ripple doesn't provide liquidity. Ripple provides technologies that allow you to access liquidity that exists in the marketplace. In the last 24 hours, the digital asset marketplace traded about $50 billion of liquidity in 24 hours. That includes XRP, but that includes Bitcoin and Ether and what have you. So, could there be a run on digital assets at large? The nuance of the question is, Ripple sells technologies. Can there be a run on Ripple? I don't know what that looks like. I mean, I can't really think about that. Could there be a run on digital assets? I don't know. I mean, today, again, $50 billion of liquidity, and, people are moving liquidity around. For XRP, a settlement happens in 3 seconds.
Now comes the confession every Bitcoin maxi feared. For 5 years, Saylor preached one gospel. You do not sell your Bitcoin. 650,000 coins, 56 billion later, the largest culprit holder on earth. Yesterday, both Saylor and CEO Fong Li admitted they will sell. Saylor's words, we will do that because that's what is in the best interest of shareholders. The religion has a liquidation clause, the math that breaks the faith. Market cap today, 49.26 billion. Bitcoin holdings today, 55.9 billion. Strategy is already worth less than the coins it holds. The first trigger condition for forced sales has been met. 8.2 billion in debt, 800 million in annual preferred dividends, a software business hemorrhaging cash. Their emergency response, 1.44 billion in reserves from stock sales. That buys 21 months. What happens on month 22? The countdown, nobody is watching. January 15th, 2026. MSCI decides whether to expel strategy from global indices. JP Morgan estimates forced institutional selling between 2.8 billion and 8.8 billion if removal process proceeds. We got 44 days until verdict. The smart money already left. Q3 2025 SEC filings. BlackRock, Vanguard, JP Morgan, and Capital International liquidated 5.38 billion in strategy shares. They did not wait for the announcement. They read the covenant documents. The revelation, conviction was never the product. Leverage was. When the architect of never sell publicly prices the conditions under which he will sell, the architect was always temporary. Temple had an exit door the entire time. It was just simply never shown to the congregation. Bitcoin does not need strategy to survive. The question is whether strategy can survive Bitcoin. 44 days, until the verdict. And last but not least, UK law now recognizes digital assets as property. This comes after an Indian court recognized XRP as property. Why is Ripple so deep inside the UK's financial system? The signs are impossible to ignore. Ripple set up in London way back in 2014, long before most crypto firms. Worked directly with UK Treasury, FCA, and the Bank of England on crypto plus payments policy. Ripple Tech referenced BOE's CBDC's research, Project Rosalind. London office placed near Swift headquarters, LSE, BOE, and FCA. Early ties with Barclays Accelerated plus Santander UK ODL pilots. UK is Ripple's largest non-US client base. UK's new ISO 20022 plus faster payments architecture mirrors XRPL's principles. Politicians pushing Crypto Hub, rules aligned with Ripple's framework. Ripple publicly considered moving headquarters to the UK after the SEC chaos. UK's move towards digital ID plus credential systems lines up with Ripple's ZK roadmap. Institutional privacy requirements match what DNA on-chain is building. London controls 40% of global FX, the exact market Ripple is targeting. If you still think Ripple has no influence in the UK, you haven't been paying attention. That's what I have for you folks. Until next time, stay savvy, stay stacking, and I'll catch you in the next one. If you enjoyed this, smash that like button, hit subscribe, and comment down below. And if you want more crypto deep dives, check out our videos right here on Crypto Meets AI. Thank you for watching. Remember to always do your own research. This is not financial advice.